Goldman Sachs warns that oil could fall below $40 a barrel. Wow, Goldman Sachs. I love you guys because you got sacks of gold and and somehow you guys control a lot of stuff. Anyway, let's check this out from rigzone.com. And if oil fell below $40 a barrel, we're going to be in a world of hurt. I know that sounds good in theory, but that's where massive deflation is coming in if this were to happen. Now, they're not saying it's likely, but check this out. Goldman, this is from rigzone.com, and this is Dateline. I think it was just yesterday, as a matter of fact. Yeah, April 16th. Goldman Sachs of sub-40 oil under one scenario. In a report sent to RigZone by Goldman Sachs, analysts revealed that they see the Brent oil price falling to under $40 a barrel under one scenario. In a more extreme and less likely scenario with both global GDP slowdown, i.e. deflation, recession, if not outright depression, and a full unwind of OPEC cuts. All right, so OPEC cuts say, now we're going to produce. We're going to have we're not going to have cut. We're going to flood the market with supply. Which would discipline non-OPEC supply. We estimate that Brent would fall under $40 in late 2025. Right now, that's at 66, 67. So a 40 below 40 would be a 33% decline, 35% decline. Yeah, that's going to be pretty painful across the economic landscape. That's just a fact if that were to happen. Now, again, they're not saying it's likely. They're saying in more extreme and less likely scenarios. This is one of four downside price scenarios. You can see they're saying they have four downside price scenarios. The analysts outlined that under their base case, they expect Brent to average about 63 per barrel for the remainder of 25 and 58 per barrel in 2020. So I have no idea how their expectations have been in the past in terms of what they expected versus what really came to be. But anyway, our base case assumes that 1, the U.S. avoids recession, and 2, OPEC supplies rise only modestly. The analysts went on to warn in the report that risks to their oil price forecasts are mostly to the downside. Outlining another downside price scenario, the analyst said, assuming a typical U.S. recession shock in our OPEC baseline, we estimate Brent would average about 61 to 53. Respectively. All right. In a global GDP slowdown and keeping OPEC baseline unchanged, we estimate that Brent would still drop basically $5 to about $16 a barrel. Anyway, we'll see. The price of oil is a big indicator of economic growth. That's just a fact. A trade and whatnot. It's kind of like the velocity of money. Actually, let's take a look at velocity of money. By the way, I get this from this guy's. Do I not have it up? Yeah, right here. My man, what's this guy's name? Jim something over at Marcellus Drilling News. Big fan of this. In fact, one of the FERC approved storage expansion Mississippi Hub. And you got some commentary there. The interesting thing, you can read all this. It's fantastic. But they have another one. The Heritage Foundation did a survey. Right here. NGOs went wild under Joe Biden. Yep. Girls gone wild, NGOs went wild. AI power demand is remaking our energy ecosystem. Yeah, it's just tons of good stuff on this guy's website. I'm a big fan, long time. But let's take a look at, hold on a second. So this is velocity of money. The highest velocity of money we've had is 2.174 right there in Q1 1997. And then you can see this massive decline since then. Even though we're way high right here, relative to where we're in the pandemic, we're still well below historical numbers. A slowing velocity of money is indicative of money not changing hands, not a lot of economic activity. And if there's not a lot of economic activity, the fractional reserve is the biggest fraud in the history of mankind. Yeah, read about the gold standard there, guys. Read about the gold standard and come back to me and tell me the fractional reserve is the biggest scam in the history of mankind. Anyway, the velocity of money is what money changes hands. How much economic activity. You're going to your dry cleaner, he's going over there, and the money changes hand. When the velocity of money isn't changing hands very much, there's just not that much economic activity. Not that much economic activity is indicative of not a huge growing economy. It's just we're not having that. And you can say all day long various reasons for that. The facts are the facts. We don't have a huge velocity of money relative to what we had in the past, and as such, we have a lower GDP growth. And that in of itself, that doesn't mean it's a bad thing per se. The GDP, the measurement of GDP, remember, every time we export stuff, all right, that is a benefit to GDP. Every time we import stuff, that's a negative to GDP. So GDP is rewarded by exports and is hurt by imports. All right. So if we really want to increase GDP, the simple way you do that is you put tariffs on to reduce imports, drop the value of the dollar, and increase exports. Shocking. Yeah. God bless. Love your thoughts. We'll see you.